Welcome again. We are going over study problem 3-12, and the question was to come up with a cash flow statement, and unfortunately our numbers didn't match as we expected them to. So if just to recall what we got in our previous calculation, so we came across a financing cash flow in the amount of $14,000, whereas our free cash flows, if I recall correctly, was $42,000, and that gave us some sort of discrepancy. And considering what went wrong, I gave you the task of figuring out where we did an error in our calculation. Now, most students encounter that type of a problem. So you come up with your free cash flow, financing cash flow, those numbers don't match. So it's because it's an accounting related calculations that we have here, it's quite natural to have these type of things, but we should learn how to fix it. So I did go through my calculations, and I realized I did a silly mistake when I did my calculation for depreciation expense here. So I wrote it as $4,000. However, it wasn't really depreciation expense, the $4,000. The $4,000 was actually interest expense. So that's my error here. So I need to make a correction on that one. So this number is wrong. So it's not 4,000. Rather, if you look at your income statement, let me quickly do that. Our income statement figure is actually showing us clearly that that our depreciation expense was actually $26,000. So now it's time to make a correction on that. So I'll just do it here. So that number, that figure should have been $26,000, and that would have increased our after-tax cash flows from operations by an amount of $22,000 all the way up to $64,000. And now when I redo my overall calculation, I need to make these corrections over here as well. So that number is changed by now. So that is $64,000, and the total will be declining by $22,000, I assume. So down to minus. So after having made this correction, we realized that we found the same figure as we did for financing cash flow. So free cash flows is equal to minus $14,000, whereas financing cash flows is also $14,000, but with a positive sign. So that shows us that our calculations are correct. Now let's go back to the original problem. So the problem was asking to put everything together into a statement. Now that we analyzed free cash flows and financing cash flows, we have a very decent understanding of how the cash flow statement should look like. So let's quickly review how we came up with those figures. So we start with net income, which was $34,000. We make some operating adjustments to net income because we are obviously trying to figure out cash flows from operating activities first. Then we will be looking at investing activities and financing activities. So those adjustments that needs to be made to net income would include depreciation adjustment, increase in accounts receivable account, decrease in inventory, increase in accounts payable, and decrease in accrued liabilities. So therefore the net cash provided by operating activities after you make all these calculations comes out as $66,000. So, and then that would be the first part. The second part would be to look into cash flows from investing activities, and obviously that one comes out very naturally to be $73,000 because all of our investing activities are involved with the gross fixed assets, and we can see how gross fixed assets changed from 2011 to 2012, and that change was $73,000. And finally, the third part, we need to calculate cash flows from financing activities, and basically that would be kind of similar to what we did in terms of financing cash flows calculations. Obviously there's a change in long-term debt. Our long-term debt is mortgage payable, and then we had increase in preferred stock, and we did pay the preferred stock dividends and common stock dividends as well. So all these added up together will give us the net cash flows provided through financing activities in the amount of $18,000. Therefore, all these three pieces added up together, the cash flows from operating expense activities, investing activities, and financing activities, will give us the net increase in cash as we go from year 2011 to year 2012. Since our beginning cash at the end of year 2011 or the beginning of year 2012 was $89,000, an addition of $11,000 should give us a $100,000 ending cash balance, and that would be our cash flow statement. I just want to reaffirm these figures by looking into our balance sheet. Let's see if we can find out this $89,000 and $100,000 in our balance sheet. So at the final step, let's have a look into our balance sheet. Let me realign the page, and sure enough we do. So this is our cash balance, and that's the whole purpose of creating a cash flow statement. Our initial so end of year 2011 cash balance was $89,000, and that's also our beginning of year 2012 cash balance. With a net increase of $11,000 in our cash accounts increased to $100,000, and we were able to explain the difference in our cash accounts. And that would be all about this